See a bounce up after the steep decline yesterday. Realty, IT and capital goods lead the recovery while financials are the big laggards. Mid-caps outperform.
Bharti Airtel turns in an inline performance on the revenue front, but margins dip on the pressure in the enterprise business. The average revenue per user also sees just a small tick up.
Sources tell CNBC-TV18 the government is weighing offering grandfathering for long-term capital gains tax on real estate till July 2024. It may also allow both a flat tax and one with indexation as options. No decision is taken as yet, but there could be an indication in the finance minister's reply to Parliament.
The political upheaval in Bangladesh is a fresh spot of bother for some consumer companies like Marico, Imami, Bajaj Consumer, and to a lesser extent, Britannia, Nestle, Dabur, which have exposure to the paint market. Paint maker Kansai Nerolac too may feel the pinch. After a rout yesterday, there has been a bit of a relief. The Nifty is up almost 180 points, led lower only by the Nifty Bank, which is just about flat. I'm Manglam Malu, with me Ekta Batra. We are speaking a day after a big rout, some recovery today. The mid-cap index has, the screen a lot more brighter than what it was yesterday. 1,800 stocks advancing for just about 600 declining. Hi, Ekta.
Hi, Manglam. Yes, and the US futures are probably supporting that sentiment at this point in time, and that's what's aiding it a little bit. So we have the Dow Jones futures, which is up around 400 odd points, the Nasdaq futures, which is up around 300 odd points. But while the equity markets have recovered, we just need to keep an eye out on the rupee, which has depreciated, Manglam. The rupee has hit a record low of 83.9 in today's trading session as well. So that should come up for you, giving you an indication that there is some amount of worry which continues on the rupee. It's probably making its way towards that 84 mark, as you can see currently at a record low. In fact, it has hit a record low for the 5th straight day as per the data that we've collected, and that means that it has been hitting record lows all the way since the 31st of July. So yes, while the equity markets have recovered, we need to keep an eye on the rupee as it probably makes its way towards that 84 mark.
It'll be interesting to see how much of the impact on the rupee is largely on account of the yen carry trade unwinding, and how much of that is on account of the weakness that we're seeing on Wall Street as well. But no such problems for the FMCG pack. HUL at very close to a 52-week high, just about 1.5% away from that. Yesterday as well was a good mover. We have Britannia as well, which has moved well, up almost 3%. Remember, the management was confident of double-digit volume growth, at least in the second half of this year, with some price hikes, though they were not pretty committal on margin improvement. They did say that they're okay with lower margins so long as volume growth comes by. And that's exactly perhaps the right way to go in an industry parched for top-line growth for the last many quarters. So we're seeing some pickup in all these FMCG companies, and consumption in general has been doing well. Barring Marico, which has problems of its own with regards to Bangladesh, where about 10-11% of their revenues comes in or are exposed to that geography itself. So despite good numbers and even better commentary, the stock is under a wee bit of pressure. But while we were discussing the markets and the opening, there was a story at the bottom of your screen talking about the DGCI sending a show cause notice to 10 foreign airlines operating in India. Timsy joins in on the phone line with what that show cause notice is all about. Timsy.
Well, as you rightly mentioned, the Central GST Intelligence Authority, that is the Directorate General of GST Intelligence, or DGGI, they have sent show cause notices to 10 foreign airlines operating in India. According to sources, the show cause notices have been sent to Emirates, alleging tax evasion worth 7,550 crore rupees, Etihad Airways for 1,660 crore rupees, Saudi Arabia Airlines for 612 crore rupees, Air Arabia for 455 crore rupees, Oman Airlines for 71 crore rupees, Thai Airways for 60 crores, Qatar Airways for 53 crores, Singapore Airlines for 40 crores, British Airways for 33 crores, and Lufthansa Air Cargo for 10 crore rupees. Now, these show cause notices have been sent as a follow-up to the detailed action that was taken against these foreign airlines operating in India. Just to remind our viewers that CNBC-TV18 had first reported about Directorate General of GST Intelligence conducting raids at branch offices of these airlines in India on 18th of October 2023. DGGI, while conducting this action, had alleged that tax evasion has been done on account of import of services from their head office by the Indian branch offices. And now, as a follow-up action to these raids and various investigations that were conducted against these 10 foreign airlines, DGGI has now sent show-cause notices raising these claims or demands of tax evasion. So let's see what these airlines have to say. Whether they get an indemnity or not is something we'll have to wait and watch for, because recently GST Council did clear a provision of Section 11A. Whether foreign airlines also follow as part of the indemnity that will be given through the Section 11A is something that we'll have to wait and watch for. But as of now, show-cause notices have been sent.
Okay. All right. Well, thanks very much for that, Timsy. So that's an important update which is coming on the entire airlines space at this point in time. But let's talk about one particular company. We have Orient Cement, which is the first management on the show. The company reported what was a mixed set of numbers. The sales volume came in weak, while the margins came in healthy this time round. To discuss this and more, we have with us Deepak Khetrapal, who's the MD and CEO of Orient Cement, who's joining in and to discuss the numbers and the quarter gone by. Mr. Deepak Khetrapal, thank you very much for taking the time out. Well, I just wanted to start by talking about your realizations, which are flat on a Q-on-Q basis. How much of the mix was, premium sales this time round, and what led to this flattish performance in terms of the realizations?
Thank you, Ekta. First of all, let me clarify that when we say flat realizations, we are one of the very few companies in our industry who have actually been able to maintain our realizations over last year or over the previous quarter. So, and that I think is perhaps an outcome of the very cautious policy that we've been following rather than chasing volumes. We try to sort of in a way get a certain minimum amount of contribution margins on our sales. And if the orders are not offering at our threshold margins, we refuse to do that business. If you look at the industry performance, like I said, we are one of the rare companies who maintained the realizations and also profitability. Despite 15% drop in sales volume, our profits are almost flat over last year. So that I think is a credit to our strategy that we've been following. Yes, the loss of volumes is a concern, and we would address it based on how the pricing looks. And we're also looking at, maybe monitoring it very, very closely. Now, one relief which I think our investors would have from hearing this, while we are giving up volumes based on margins in the B2B market, in the B2C market, as we call it trade sales, we are actually maintaining our market share. But on the B2B markets where large customers are there, they are hardly loyal to you. You give them a good price, they will come back. So that's the nuance in how we are picking up our customers and markets.
Incredibly nuanced view out there, Mr. Khetrapal. Always a pleasure speaking with you. If you could, help us with just three numbers. One, how much is value added as a proportion of your sales currently? Last time you said it was 22-23%. And in light of this strategy that you're using, realizations over volumes, what's your updated guidance on volumes and EBITDA per ton for the remainder of this year? So value added as a proportion of your mix, volume guidance and EBITDA per ton guidance for the year.
So the good news is, despite 15% loss in volume, my premium sales have actually been very stable, and over the 21% that I had reported in the previous quarter, I'm happy to say in a poor quarter also the premium sales that had as much as 23% of trade sales. So that strategy seems to be really, really well in place. In terms of the volume guidance, quite frankly, this perhaps is the absolutely incorrect time when the markets are actually seeing no volumes, at least in the market that we are exposed to. We've had extensive rains all across our markets in Maharashtra and in Telangana and Karnataka. As of now, I think I'll hold my views on what margin direction we want to give to the investors. But all we can tell you is that we will be chasing profitable volumes. We'll be chasing more premium volumes all through the place. But too early to give me for me to give you the annual guidance. This is just the wrong time.
Okay. When would it be a good time? When do you think you'd have visibility? By next quarter?
Yes, the moment monsoons get over, I'll tell you why the monsoon demand is weak, not just for us, for everybody in the market, right? The good part is that once the monsoons get over, there's a lot of pent-up demand which hits the markets. One, for construction to catch up with what was not possible during heavy monsoon. Secondly, there's a lot of repair work to infrastructure and housing that becomes necessary because of very heavy rains. So these two factors typically give us much better demand in Q3 than we normally would have. Having good monsoon in India always is good for the second half of the year. So we are looking forward to that.
All right, but could you give us a sense of how pricing has panned out? Because there were expectations of a mild increase, at least post-elections ahead of monsoons. Typically, monsoons, we don't see much price increases. How have prices changed for the industry and for you post, in first quarter? How do they compare with the previous quarter?
Yeah, so that's a good question. Normally, we would see that Q1 should have had much better prices, but the prices, one, the demand was weak. Secondly, I think some of the larger players in the market are preferring to choose volume, so they are reducing the prices. So prices have been weak. In Q1, where we reported stable, every other company is actually reporting degrowth in pricing. And July, I can mention that to you, July prices are further down below even the Q1 prices that we've had. So pricing is a matter of huge concern right now, along with the volume.
Would you be able to quantify the difference between July pricing and what the average in first quarter was?
It's about 10 rupees a bag.
All right, 10 rupees a bag lower.
2.5%.
Okay, that's... Go ahead, Ekta.
Okay. Mr. Khetrapal, just on that sense that you're going to probably get more visibility in the second half, what exactly is the capex lined up for FY25 then, based on what you are saying when it comes to pricing, based on what you are saying when it comes to visibility of demand? How much do you think you need to add on in terms of capacity addition? What are you spending on that?
See, capacity addition, Ekta, as you would know, is a longer-term view on the business. It's not driven by how 1 quarter or 2 quarters look. And when we start adding capacity, 15, 18 months are the bare minimum time before the capacity comes online from the time we start construction activity, right? So from that perspective, our capex is more governed by we having all the necessary clearances in hand. We need to add capacity at our Karnataka plant in a hurry. I mean, last 2 years, we've been selling nearly full capacity from that plant. And as far as we are concerned, first of all, we are chasing, and our application for environmental clearances are already on the portal of Ministry of Environment and Forest. In the next 4 to 6 weeks, we expect to get the environmental clearances. Post that, we'll start construction activity fairly quickly. Now that the clearances will be coming in during the second quarter, we are expecting that by the end of the year, at least at Chitapur plant in Karnataka, we would start the doubling of capacity project that we've been chasing.
Mr. Khetrapal, where you operate in the southern part of the country, there is a fair amount of storm and you're in the eye of that. A lot of acquisitions taking place, a lot of consolidation out there, and a lot of clamor for market share, so to say, as well. And in that, a lot of people are looking at your asset as one of those prized possessions too. I mean, I remember having spoken to Parth Jindal just 2 weeks ago, and he did say that they are looking at a lot of capacity increase, closer to 60 million tons by the end of 2030 is what they're seeking. There have been multiple reports that there is a jostle for Orient Cement between either Adani's or the Jindals. Would you have any comment on that, or are you not on the block?
Look, as far as I'm concerned, there's so many people eyeing us at a good asset. I think it's a compliment. We are recognized in the industry as one of the most efficient players, one of the players who has the highest amount of premium sales cement in the market, at the highest premium in the marketplace. So we are a good asset. That's a compliment. As far as the jostle for that is concerned, I'm blissfully unaware of all that. So it's perhaps happening at their end, not at my end.
You're a good asset and you're on the block. Would that be the correct assessment?
I am a good asset which people might be eyeing. I'm not saying we are on the block. Please don't put words in my mouth. I've never...
I'm glad you clarified. We were just, clarifying those interpretations.
Okay, so I'm sure you are not in the place to comment on that as well, Mr. Khetrapal. You probably wouldn't be as privy to it, or if you are privy to it, you're not going to let out on it. But if you could just give us a sense in the analysis of the South Indian market before you let us go. before we let you go. In terms of pricing, considering the kind of consolidation that is taking place, what do you anticipate, at least in the next couple of months? Do you think that that pricing is going to get far more aggressive? If so, to what extent? And what would the new dynamics of the market be as well?
Well, as of now, the prices are under tremendous pressure. As I'm sure you heard that earlier. I've told you July has been even worse than the first quarter. So the prices will remain under pressure. The only way prices can improve is once the demand comes back to the strength that I spoke about. Till that strength in demand comes back, obviously the prognosis always the price will be under pressure because some people will chase volumes, right? So for the next couple of months that you spoke of, I think it's going to be a difficult time in South India. But as I mentioned, personally, I do expect volumes to pick up once the monsoon gets over. There's a lot of pent-up demand that we're expecting to come in. And that will be the time to perhaps look for some improvement in pricing in the market.
All right, we will close in on the volume guidance once we speak post-monsoons, post the second quarter perhaps. There will be better outlook that you will have in terms of what the EBITDA per ton as well as what the volumes could be. But for now, you are happy with the premium positioning that you have with the kind of realizations, choosing realizations over volumes. We'll keep an eye out on the pricing, but more importantly, we'll watch out for what takes place in the southern part of the country as well, where there is a fair amount of clamor for market share and capacity. Thank you so much for joining in. Yes, please go ahead.
Profitability, let me remind you, we are the only company in the whole industry which has reported improvement in EBITDA per ton over last year. The only company. So
that's true. And
look at our focus on profitability more than growth and volumes, because I think that we're playing slightly contrarian game to the rest of the industry. And
that explains why you're a good asset as well. That explains why everyone's eyeing you.
Thank you so much. Thank you. Appreciate that.
All right. Always a pleasure speaking with you. Take a short break, come back, get you more on the markets and a lot of stocks that are moving around this afternoon. Stay with us.
Welcome back. Well, just watch out for a couple of companies such as Gland Pharma. It comes out with its numbers today and showing a good amount of traction on the upside. So that stock is up around 2.5%. Numbers will be out late evening, but nonetheless, there's some amount of interest which is being shown on that particular counter. But nonetheless, the big news that we've been tracking on the political side is the political upheaval in Bangladesh. It's a fresh spot of bother for consumer companies. Mangalam, you've been tracking the impact of this turmoil. Tell us, what have consumer companies told you and how big a concern is it?
So, the most important thing is that because it's such a close landlocked neighbor with India, there has been a fair amount of business with Bangladesh as well. But the most exposed consumer company here would be Marico, which is actually the one which is also falling today despite good numbers. So Marico is actually down about 4%. So if you look at their overall, revenue, international business is about 25% of the revenue. 44% comes in from Bangladesh. So net exposure to Bangladesh would be around 10 to 11%, and that's why that's down about 4% as well. But for the other consumer companies, the sales exposure is less than 5%. In fact, in most cases would be about 1 or 2 odd percent itself, and which is why all these stocks are not perturbed by the impact in Bangladesh. So Dabur is up around 4%, Imami, Nestle, GCPL, Britannia, all of them sub 5%, closer to 1 to 2% itself. For names like Bajaj Consumer, Kansai, Nerolac and others, it is again closer to 4 to 5% itself. But the rural recovery tailwind is so much that people have looked past the Bangladesh crisis itself. But for Marico, because the international business has been doing extremely well, that's the reason why, and it's been so, pegged around Bangladesh. That's the reason why that stock is under a wee bit of pressure. I'll be interested to see how VIP performs as well, because they have a capacity in Bangladesh, close to around 30-35% of their capacity is sourced from there. That stock too is under mild pressure, reports its numbers today. So to that extent, commentary around that would be very crucial to track too. Then you have some suppliers from Bangladesh. So Trent, for instance, has a lot of its supply coming in from 3 countries, which is Hong Kong, Thailand and Bangladesh. Though again, out here, growth has been very strong. It can be a near-term supply disruption, which explains why the stock again is not very perturbed by what's taking place in Bangladesh. But what's really an opportunity is for garment makers, for a lot of these textile players, because remember, made in Bangladesh as a textile brand was pretty active world over. So maybe even if supply chains get hit, then all the global brands, the global companies that source from Bangladesh will look at Bangladesh +1. So interesting times where we earlier spoke about China +1 and now we're talking about Bangladesh +1. And that explains why names like, Gokul Das Exports surging, Himmat Singh Said surging, we have Kitex Garments, all of them higher, including the likes of Welspun Living, which also, by the way, benefit from a weaker rupee because a lot of their revenue comes in from exports itself. So better realizations coming in. So garments and textiles, positive. Consumer companies, mild negative. For Marico, a little more than the others.
Okay, so definitely it could be possibly a gain for us considering what has taken place in Bangladesh, but we really need to assess in the next couple of days. But we'll take a short break. On the other side, Sachidanand Uttekar of Trade Bulls will join in with some of his trading ideas today. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Perfect time to get you up to speed with what's taking place in the F&O side of things. The Nifty is holding up with gains of almost 150 odd points. But remember, it is off the highs. And the reason why it is off the highs is because of the Nifty Bank, which is putting some bit of pressure on the gains that we're seeing on the Nifty. The mid-caps, however, doing a lot better. So the advanced decline chart comes up for you. And that tells you that the broader market health is pretty strong, even though those lines have come a little narrower. But, there's still about 3 stocks advancing for every 1 stock which is declining. If you look at the active options and if you look at the 1 stock which is actually going to be the stock of the second half of trade, it has to be HDFC Bank. Why do I say that? Because it's at 1612. The 50-day moving average is at 1617. So the stock is below the 20 and the 50-day moving average. If it falls below that, then maybe, the next leg of support comes in at 100 and 200-day moving averages around that 1550 mark itself. Why is HDFC Bank important? Because it's the highest weight on the Nifty, highest weight on the Nifty Bank, and also the highest weight on the Nifty Financial Services Index, where the weekly expiry plays out today. Where is that index? 22,750. And the most active calls are the 22,800 call and the 22,700 put. And the 22,750 call and put are equally active. The premium on that straddle is close to around 100 rupees, telling you that the street is bracing for a 22,650 to 22,850 sort of range for the Nifty Financial Services expiry. So long as it stays in the range, no real problems out there as well. For the Nifty, or at higher levels, there is some supply that's coming in, which is what's visible in the kind of call writing that we've seen around 24,300. But at lower levels, there is demand around that 24,000 mark itself, which explains why 24,200 put writers are equally active for a premium of 125 rupees too. So those are a couple of factors for the markets that we'll watch out for. For the Nifty, the broader range would of course be the 50-day moving average of 23,862 at the lower level with 24,575, the 20-day moving average at the upper level itself. So those are a couple of factors for the frontline indices and the markets. The one individual stock that I'm watching out for today is Manappuram Finance. A lot of open interest built up beyond that 95% level as well. So the stock may enter F&O band today.
Okay, all right, Banglam. Thanks very much for that. Sachidanand Uttekar of Trade Bulls joins in on the show to discuss the technicals of the market. Sachidanand, hi, welcome to the show. Well, if you could just start by giving us a sense, is today's gain showing you enough confidence to take any kind of longs?
Good afternoon, Ekta. Good afternoon, Mangalam. Definitely, when we look at both the indices, they are still trending within the previous day's trading range itself. When we look at Nifty, so far the support at 24,000 has been very strong and sustainable. But on the higher side, we need a very confident closing about 24,460 to redeploy aggressive long positions. When it comes to Nifty, a very similar kind of a scenario, Nifty Bank, it is a very similar kind of a scenario wherein the 50,000 support looks confident at least for the day. And on the higher side, it needs a strong swing above that 50,575 mark. So I think when it comes to indices, they are showing signs of consolidation. Certainly, there is not much weakness which is evident immediately. So we are avoiding a trade when it comes to indices. But certainly the way markets are, positioned, there are long short opportunities which are still, possible. One of them is the Asian Paint, which has been outperforming for the last 3 weeks. If you look at the overall structure, again, there's a very confident bullish flag formation on its daily scale. The kind of open interest built up which we have seen in the last 2 weeks, it is indicating that this particular rally may extend towards 3,300. So this is one space where we are comfortable holding our long positions, keeping a stop loss at around 3080. Even from a trading momentum perspective, one can initiate fresh longs. The pattern target is placed at around 3,300. But on the short side, Bharti Airtel is showing signs of distribution almost after 34 weeks of sustained up move. This is the first time where its weekly RSI has slipped below that 70 mark. We have seen a good amount of short positions in today's trading session as well. And the way its averages are placed, we may see this particular stock declining towards 1370, and that's why we have recommended building short positions when it comes to Bharti Airtel. From a trading perspective, the stop loss can be placed at around 1465 on a closing basis, and fresh shorts can be deployed for a target swing towards 1370.
All right, thanks a lot, Sachidanand, for joining in and giving us your views on individual stocks and the index. We'll take your leave on that. On the other side, we'll have the management of Monte Carlo. They reported their numbers. Sandeep Jain, the executive director, joins in to discuss their first quarter earnings and, more importantly, the outlook for this year. Stay with us. Welcome back. Textile companies are buzzing around. The uncertainty around Bangladesh is looked at as an opportunity for Indian textile players. Monte Carlo Fashions, of course, is a largely domestic player and has reported their numbers as well. So we'll talk about all of that and also what's taking place in Bangladesh right now and the impact perhaps at an industry level in India. Sandeep Jain, the executive director, joins in now. Thank you, Sandeep, for joining in. A comment on, what proportion of global textiles come in from Bangladesh. Could global players now be looking at Bangladesh +1? Is this a positive for Indian makers? If you could give us a sense of how trade is between the two nations.
Yeah, there is a positive and there is a negative also, because we also export a lot of cotton yarn and cotton fabrics to Bangladesh that might get impacted. But at the same time, we also import, some of the brands import garments from Bangladesh. But yes, because other countries, when they look at Bangladesh, they will definitely look for Bangladesh +1 country, and India is the only alternative which can, substitute Bangladesh in garments.
So what you're saying is that for garments, it is a positive, but for yarn exporters, it may perhaps be a negative, especially cotton yarn exporters, because we are exporting yarn to them, which they in turn are making garments of.
Yes, yes.
All right.
Okay. All right. But Mr. Jain, do we have enough capacity to probably accommodate this change? Because I'm assuming that this change might be more immediate and urgent as compared to, larger changes which happen for different issues. Say, for example, the pharmaceutical space and China +1. But do you anticipate that India can fulfill that kind of capacity demand, say, on an immediate basis?
Near term, yes, but not for a longer period of time, because right now there is a little bit of slowdown in India as far as garmenting is concerned. So near term, they can definitely take orders. But to substitute Bangladesh, at a larger extent, it's not possible as far as Indian garment manufacturers are concerned.
But why do you say that? What is the key reason or the difference between the two markets that it's difficult to substitute Bangladesh's textile production in India?
Firstly, I think the production base is much larger in Bangladesh as compared to India. And they are also, I think, the second largest exporter of garments to the world. So we need to build the capacities to fulfill all the demands.
All right, take that point. Thank you so much for giving us an industry perspective. Let's talk about your own numbers itself. The first quarter typically seasonally weak for you as well, because there's a lot of inventory correction that takes place. But basis what you've seen in the second quarter and your outlook for this year, what can you guide us in terms of revenue growth? And also if you could give us a sense of how, some of your new verticals are performing: footwear, kidswear, and the brand like Rocket, which was about 4% of your sales.
Yeah, the second quarter has begun well. July sales have been better as compared to last year. Even August has begun well. So we are very positive going forward in Q2 and Q3, and we see a flat to a single-digit growth as discretionary spending is still not happening. And as far as our new brands are concerned, like the Rocket, it's definitely picking up and performing well as compared to last year, and also the kids wear is performing. And we also have home textiles, which also is growing double digit even in this financial year also.
Okay. So what can you sense? I mean, what is the entire fiscal looking like in terms of FY25? What do you think your exit rate could be in terms of revenue as well as margins?
In just recently concluded con call, we have guided for a flat to a single digit growth in this financial year, but there would be a substantial improvement in the margins. We see a margin improvement around 200 basis point as compared to last financial year in EBITDA.
All right. Your North India Kashmir plant, I remember, was supposed to come on stream. What's the outlook out there? Has it come on stream? And what's the capacity utilization plan out there?
No, that plant is cancelled because there has been oversupply, particularly in the blankets and quilt segment. So it makes more sense to buy from the market, which is more competitive now as compared to the past. So we have cancelled that project.
Okay. In terms of segments, since you are, just guiding for around a flat to single-digit growth in FY25, which is the segment which is probably going to pull you down the most? Because if you see your year-on-year performance, your cotton segment has grown, but woolen as well as home textiles has reduced. Kids has done well, but what would be the key growth driver for you for the entire fiscal, and what would probably be the one which would, you anticipate being sluggish?
I think definitely the woolen segment, which is going to bring us down in this financial. Cotton segment is growing basically, as last year there have been a lot of inventory correction which happened at the retail level also. So we are, cautious not to make much inventory in winter wear. So that is why we are projecting a flat sales this year. But we may revise our guidance in Q2 once we see the season going ahead, and we may revise it after the second quarter two con call.
Could you clarify on the Kashmir issue now? If you could give us a sense of if you are, doing any sort of major capex in the next couple of years, and also, number of inventory days. If you could give us a sense on working capital days as well, because you're consciously working on reducing the inventory that is there in your books.
The Kashmir project has already been cancelled as because there have been some oversupply, and as far as inventory days are concerned, it's around 130, 140 days, and also the working capital will remain same as last financial year, because we are in a business where we have to supply, almost 50% of our goods in August, September, and October. So we have to build the inventory before we make a supply.
All right, cool. Take that point. Thank you so much, Sandeep, for joining in. A quick, update on your results and a whole host of other industry-related issues as well. Always a pleasure speaking with you. Take a short break, come back, focus on the markets and a lot of individual stocks.
Welcome back. Just want to point out a couple of stocks. Aurobindo should come up for you. That particular stock is in focus because their UGR Unit 2 has now been classified as official action indicated. This took place last evening. It is a site which manufactures injectables, and there are only 2 ANDAs which are approved from that particular site, and hence there is no reaction on the stock. It's around only 1% of their total revenues, so the impact is quite limited for Aurobindo. And that's the reason you're seeing the stock just about holding up with a gain of around 0.5%. The other stock doing well is Vijaya Diagnostics, which is reacting very well to its numbers. So that stock is up around 5%. We'll take a break. Up next, commodities. Stay tuned.
Welcome back, and joining us on the show now is Prabhu Damodaran. He's head India Textpreneurs Federation. Mr. Damodaran, thank you so much for joining us. And, after the Bangladesh unrest that we've seen, the knee-jerk reaction or the sentiment clearly seems to be in favor of India, because India is also a huge textile destination in that sense, in sense of apparel imports and exports as well. Apart from a knee-jerk and a sentiment, how do you see these numbers playing out?
Good afternoon, and it's unfortunate to note the internal turbulence of Bangladesh as a friendly neighbor, and we pray and hope for the quick recovery from this kind of a status. Yes, Bangladesh built a robust ecosystem in apparel manufacturing. Their monthly run rate of apparel exports is in the range of $3.8 to $4 billion. Their ambition of achieving $50 billion exports is a commendable one. And due to these incidents, definitely some kind of a setback, at least in terms of sentiments they will face from international buyers. Actually, in the last few years, Bangladesh grabbed more market share from China in the market, particularly in the markets of US, UK and European Union, by using a lot of advantages with their scale and competitiveness. Now, the current incidents will create three kind of scenarios. Number one, the buyers will naturally develop a kind of fear over the delivery times, because in apparel manufacturing as well as in supply chain, delivery times are very crucial. This kind of turbulence will create a small kind of a fear among buyers, and they may try to divert some portion of orders to countries like India, particularly in cotton apparels. And India's monthly run rate is in the range of $1.3 to $1.5 billion of apparel exports. We can also accommodate another $300 to $400 million of additional capacity in a very short period of time. We have capacity available, so those kind of changes may happen in short term. But structurally, Bangladesh also should survive. We also should grow. How is it possible? And definitely, both countries should use China Plus One opportunity. This particular incident reinstates the fact that buyers always will prefer multiple destinations instead of depending on a single destination, because risk can be any time. And number two,
sure. Mr. Damodaran, I just wanted to get in and ask you, when you say that India can increase capacity in a very short period of time, what short period of time are we looking at? Are you looking at this season, because we are into festivities and the international export market is also quite buzzing? What is the definition of this short period?
Actually, ma'am, the larger players already have confirmed orders for the visibility of 3-4 months in India. But still, SME manufacturers have some capacity left, reasonable capacity left with SME manufacturer. We all know that India is predominantly an apparel SME manufacturing ecosystem. So we can immediately take orders. There is no time left, and we can easily accommodate on an instant basis. This is one factor. Second very important factor is we also have a strong export presence in Bangladesh in terms of yarn and our fabrics. Monthly, approximately around 3 crore kgs of yarn we are exporting, including fabrics. Our monthly run rate is around 1,000 crores per month to Bangladesh. Bangladesh don't have a strong manufacturing capability in yarn. So for their apparel export ambition, India is the right partner to supply yarn and fabrics. So quick recovery of Bangladesh is also very important for the healthy operation condition of spinning and fabric sector here. We are hearing from the ground from Bangladesh, they may come back in a week time, at least in the factory operation levels. So that will be good for spinning sector. Once such turnaround happens, yarn demand also will be very strong, because already some lackness in production is there.
Fair point. We understand that. Thank you so much, Mr. Damodaran, for sharing those numbers with us. So, well, of course, it's a sentiment positive for India, but not as much, because India exports as well in sense of fabric to Bangladesh. So it is in good interest that Bangladesh does come back. But for the next season, for the short duration, of course, India will increase its capacities and be in the positive there. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead after this break.